There's a new and unusual sign of market weakness that is taking place. We're going to talk about that today. Plus, there is also another stat that looks similar to 2008. So, of course, we got to take a look at what's going on there. Plus, sellers seem to be losing confidence. So let's get into it. This first new and unusual sign of market weakness, according to the Cromford report, is the average list price per square foot for active listings. So these are not sales prices, but these are the prices for which homes are listed. And you can see that this is 2025, this pink line, we've started to move downward, which is typical trend, right? But what's happening that's different is that this is happening about 6 weeks earlier than what we typically see. This trend started to go down in February, when usually we start to see the downward trend take place at the end of March, a full 6 weeks past what we've seen this year. And the reason for that is our market here kind of slows down a little bit. We have our very busy spring selling season, and then as that slows down a bit, sellers aren't pushing price as much, and their list prices become a little bit more reasonable because there's not usually as much buyer demand as we get into the slower months. However, it looks like sellers may be losing confidence a little bit sooner here, as we are seeing this downward trend start much sooner than we typically do. Now, combining this data with what we already know about price changes on a weekly basis, seeing those price cuts taking place every week, as well as seller concessions, we know that sellers just don't really have much of an upper hand right now. If we look at our seller concessions, yes, this has gone down over the last few weeks, but it's still almost half of sales. It's 46% of sales have some form of seller paid concessions over the last 30 days, and that median amount is $10,000. That means that sellers are giving on, as the median, $10,000 to a buyer to be used towards their closing costs, whether they're buying down their rate or just paying for their closing costs. That is all negotiated into the deal. So we're seeing that very commonly. So in addition to listing their home for a little bit less, then they are also giving away some concessions as well. So all in all, starting to see a weaker market for sellers much sooner than we typically do. And what's interesting is we are coming up on the time of year that is always the best year to be a seller and listing your home for sale, even according to Realtor.com. The best time to sell, the week of April 13th through the 19th. So it is around the corner, you guys. And I did a video about this last year, but really this week is expected to have the ideal balance of housing market conditions that favor home sellers more so than any other week in the year. So this is data collected from Realtor.com nationwide, but particularly in Phoenix. I know that April is our highest month of contracts. It's usually the time where we have the most buyer activity because we have a lot of seasonal visitors. The weather is perfect. Everyone's happy. People want to be looking at homes and moving here. So the springtime is always the best time to be listed. So if you're someone who's considering that, despite all of these, other feelings of the lack of seller confidence and that kind of thing, make sure you get your ducks in a row now, because this is around the corner. If you're just curious what an instant home value would look like for the value of your home, you can check the description below. I have a link that will take you to that information. Now, buyers, this is great news for you. Sellers are starting to list their homes for lower price. They're giving concessions. You don't have as much buyer competition out there. You can negotiate a little bit harder. Rates are the one thing that buyers are not loving right now. And unfortunately, they started to go up a little bit again. I mean, quite volatile, but went up just a tad bit from where we saw like a couple weeks ago. We're now at 6.81 instead of the lowest point was 6.7. So went up a little bit, although not too much. But it just doesn't seem like there's too much going on out there right now that is going to change the rates drastically. So if you're someone who is wanting to buy, but these rates are really making it challenging for you, keep in mind there is the possibility of finding a home with an assumable mortgage. I have a link below for a description on how that process works, and also a link to search for homes with assumable mortgages. So seller competition out on the market. Let's look at what these active listings look like, because we've been looking at this every single single week, and this continues to climb. Sometimes when I take off these previous years, it's just a clearer picture of what's actually happening with active listings. We're not seeing as many collect week over week as we were at the beginning of the year, but we're still seeing a very strong upward trend. 24,764 active listings on the market. That does not include anything that's under contract or contingent right now. So the overall number of homes with a sign in their front yard is more than that 24,000. If we look back the last few years, you can see that, we typically do have a little bit of an increase in active listings. 2023 was a little bit different for us. But usually we do start to see, like in a normal market, those active listings start to climb at the beginning of the year and taper off. But this has just been a much sharper increase than we've seen most years, especially in the recent past. Now that plus, now if we look at new listings hitting the market, this is the number of new listings every month. So not just the number that's on the market, but the new ones that are coming to market. So we can kind of count those additional, what that activity looks like. And in January and February, we beat the last 2 years in terms of new listings hitting the market. So far for March, we're about halfway through March, and we are tracking to probably beat definitely 2023 and probably 2024 as well, as far as new listings hitting the market. Now, if you are a seller, of course, these conditions are not ideal, but they are not by any means a type of market where you can't sell your home. For instance, I'm reading about all of this, yet I just had a home get listed on Friday and go under contract by Monday. I've had that happen 3 or 4 times this year already with some of our listings. So it really depends on the price of the home, the location, and the condition of the home, because homes are still selling very easily if a lot of those factors are in alignment. Now, on the buyer side of things, there are those situations where you truly have the upper hand and you can negotiate pretty hard on price, concessions, whatever it is that you want. And a seller may be much more willing to flex based on the time they've already spent on market or the competition in their area, just knowing that they kind of have to concede a little bit in order to sell. So it does vary throughout the valley. Like I said, price, condition, all of that making a difference. So there is an opportunity to take advantage if you're a buyer, and there is also an opportunity as a seller to still have a quick sale for a good price. Now, one of the stats that has come out recently that reflects a market of 2008 is our listings under contract. And it's kind of hard to see on this chart because we have so many data points here, but I'm going to take off all these other years except for 2025 and 2008. And so the Cromford report is stating that the last time we had seen fewer listings under contract in March, remember March being one of our busiest times of the year, was 2008. That was the last time we saw something lower than where we're at today. If we look back at 2024, we were just barely higher than where we're at today. 2023, same. 2022, obviously, the COVID years, we had a lot more activity in the market, but pretty much every year tracking above where we're at today. And why we care about listings under contract is because this is our buyer demand. This is the number of buyers that are going out there and actually making an offer and getting under contract with a seller. Now, the Cromford report is saying that if we see rates come down 0.5%, it's very likely and reasonable to expect that we'll see some increase in buyer demand. But I just don't know if we're going to see rates come down another 0.5%. There's not a whole lot going on in the markets right now that would really justify a reason for rates to come down that much. So where is the CMI this week? Well, it has gone down again, 81.9, technically in a buyer's market. This is the lowest we've been in a very long time. In fact, I haven't shown this chart in a while, but now we can see how this looks compared to previous years. So much lower than we were in 2024, 2023, 2022. I mean, we have not seen this reading on the CMI probably. In fact, I don't know. Let's find out how far we need to go back here to see a reading that low. We got kind of close in 2014. Let's see. Still going. Oh, there it is. 2009, folks. Got to go back to 2009 to see the CMI as low as it is today. Now, while we are in a buyer's market, we're not that far from a balanced market. It's not like we're at 50 on the CMI, but like I said, this is the lowest we've been since '09. Pretty interesting. Now, our demand isn't that terrible. It's at 80. It's only 20% below normal. It's not like we are really suffering with demand here. However, our supply just keeps increasing. Supply is almost at normal, which we haven't seen in a very long time. We've always been undersupplied in the Phoenix area. So supply being at normal and demand being below normal is putting us in this buyer's market. And as I've shared, every city is a little bit different. So here is the latest chart from the Cromford report. These are the major cities and their respective CMI. They can't do this for every city because there's not enough data. So they do it for the 17 largest cities in the Phoenix metro area. Now, I've always talked about, you can see the change here, and this is a month-over-month change that we're seeing. Last month, it was 148.8 in Chandler. This month, 141.3, so it's a 5% change month over month. If you average all of these, the change month over month for the CMI for every major city, that change this week is at negative 1.5%. Last week, when we were looking month over month, it was negative 2.3%. So these month over month changes have slowed down a little bit, although, still a negative change, and overall seeing a lot of movement away from a seller's market and into a buyer's market, although it's slowing down a little bit. So this helps you to see kind of what activity is going on. Like I said, every area is a little bit different. So if you have a home in Chandler that you're selling, you're going to find that to be a little bit easier than selling a home in Maricopa that is deep in a buyer's market, while Chandler is still in a fairly strong seller's market, although it's losing ground. So every area is a little bit different. It's really important to understand that when you are listing your home, to know how price sensitive the market is. And it's also important to know that as a buyer on how much you can really negotiate in order to get a deal under contract. Now, if we look at the contract ratio, which is measuring the number of homes on the market active for sale versus how many of those are actually under contract, for whatever reason, their chart is not showing every single zip code anymore, but we are seeing a few warmer zip codes in what we can see here. So 85304 in Glendale, 85053 in Phoenix, 85381 in Peoria, Youngtown, and Goodyear all are warming up a little bit. This zip code in Chandler remains pretty warm. And then we've got a lot of blue, meaning we're in kind of that cold market or colder, depending on the area. So seeing some of these zip codes warming up isn't surprising when we see that month over month change of the CMI slowing down a little bit. We may have some areas that are warming up, although it just feels like this spring selling season is not happening this year. We're not getting the momentum that we typically do. You already saw that the average list price per square foot has started to turn down sooner than normal. We aren't seeing the buyer demand and the listings under contract really shoot up as we typically do. And we know there isn't a whole lot of positive outlook in the movement in rates right now. So if you're a seller, I would just make sure that you are listing your home competitively, because if you are not, you're probably going to be on the market for a longer period of time, and therefore it's much harder to recover a good price the longer you're on the market. And as a buyer, make sure you're speaking with your lender often, understanding what's going on with rates, and potentially checking out those opportunities for assumable mortgages. Check the description below if you want access to any of those resources, and I will see all of you guys again next week on my next market update.